Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Friday, April 6, 2007. We're going to take a look at the markets here. We've got the S&P 500 on the screen right now, the spiders, SPY. And on Thursday, we did see continued strength in the markets. The spiders were up 39 cents, or about 1/4%. And it's broken past this level that that we were looking at as in terms of a cup and handle, and this being the top of that area. So it looks like it's breaking past that level. The bears will point to the lower volume, which, I don't think is really that significant, because we had a lot of people not trading because of today's holiday. And the point is, the only thing that pays us in the market is price. And, just as we saw the beginning of this bull move way back last year in June, July, occur on light volume, actually July and August. It occurred on light volume in here, and the volume didn't come till later on in the move. But the point is, what we want to do is look at price action first and foremost, and be aware that volume might not be as strong. But a lot of times volume peaks at turning points and diminishes with the trend. And we're trending higher clearly in here. And the good news is it's not just a runaway market. The fact is, it's been a kind of steady grind here. In particular, yesterday was a steady grind higher. And we can look at the 1-minute chart and see that here. That it was, held above daily VWAP all day long, ran up to daily R2 at the end of the day. And that was, the top of that move. But since this gap higher, where the buyers did take control back on Tuesday, Wednesday, Thursday, Tuesday, we've had a nice steady uptrend, and the buyers are clearly, like I said, back in control in here. And it hasn't been a runaway market, which is good because it allows more shorts to, not panic and get confident and put more short positions out there, which is good for us in a bull market. We want short sellers out there because they become a future source of potential demand for the market. If we then close this gap, that might be where we get a big short covering rally, and then after that, we could be off to new highs for the year, and those are really within spitting distance at this point, the new highs, that is. As far as a closing basis, it looks like the high close is about 146 or so, and here we are less than $2 away from that on a $144 market. So we're about 1.5% away from new highs in this market. So it continues to, I think we have to give the benefit of the doubt to the buyers in here. We've got this 50-day moving average that is flattened out. We do have higher highs and higher lows, and that's the definition of trend. Moving averages, as you know, I follow a lot, but moving averages are a lagging indicator. There's nothing leading about a moving average at all. It's a reflection of what's already happened. What we want to get paid, what we get paid on is what's happening right now. And what's happening right now is that the market found support at this prior level of resistance. It probed there 4 different times actually. And now we've got a 10, 20, 50-day moving average all starting to head higher again. And price action is bullish. So I think if we can, a lot of people are looking at this saying, well, it's got to close that gap. I mean, gaps, they were important on this day, and maybe there's going to be some supply up there, but don't read too much into these gaps. People give too much credit to gaps, I think, in thinking that that they're going to be a big area of resistance. We'll see what happens. We definitely have potential for resistance up near this 145 area, but it's only a potential source of supply. Let's see what the market does. Let's give the benefit of the doubt to the short-term trend, which is showing this nice, steady, higher highs and higher lows. And as long as, for now, I think the best level of support on the S&P 500 is down near about 143.5, and we're acting strong in here. Looking at the Nasdaq 100 now, the Qs, we see kind of the same type of story, that this prior level of what's been support here back in mid-January, then became resistance after the large sell-off, did then act as support near that 43.40 level was what we had been identifying, and it's bouncing. It's bounced, very nicely from that level. In the last 4 days, we've seen the market go from 43.5 to 45.5, right up to the top end of this range, and we have the push past this, what I've been calling a cup and handle. But basically what it is we've got higher lows and we've got this level of resistance. Now, the buyers are getting more aggressive. The message here in a cup and handle, the message here in this market is the buyers are getting more aggressive price-wise. They didn't wait for a pullback to 42 to get aggressive and take control of the supply-demand like they did right in here. Instead, the market pulled back to about 43.40, and that's where they took control at this level of prior resistance. So the market's doing what it's supposed to do. So it had resistance here at 44.5 this time, and then it was tested about 2.5 weeks later, and now 1.5 weeks later. So not only are buyers getting more aggressive price-wise, but also time-wise, and now we see the market's broken past that level. Now the break did come after 3 or 4, after 2 prior days of strength. So the market is a little bit extended in here, and what I think would be a likely scenario going forward, at some point next week, is maybe a little bit of continued upside up towards the high end of this gap area right in here, up to that 45 level or so, and then a pullback, and let's see if this 45.5 holds as support. That would be a very bullish setup. It would show that the buyers are, able to push it back up and close that gap, and a low volume pullback towards 44.5 would set up this resistance area as support, and from there I think we can springboard higher to new highs for the year, take out this 45.5 level, and really give the short sellers a hard time, and that would be a very good thing for the bulls. So looking at the IWM, the Russell 2000, we see that this market again has been the strongest market. Except on Friday, it did close with a 13-cent loss. I don't think there's anything to read into that, but in order for this market to become really more bullish, we need to push past $81 a share on the IWM. It looks like the best support is probably down near about $80.20 right now. Just looking at the Qs, I think that the 44.30 level obviously is the or maybe not so obviously, but about 44.20 to 44.30 is where the better support's going to be in there. Looking at the semiconductors are again, they're in this longer term range, just this 33 to 36, 32 3/4 to 36, right back in the middle there. So they found support at the 200-day moving average. Looking at a shorter term time frame, we were concerned that, or we would have been concerned if it broke down through 33.20. Instead, the buyers took control, pushed it back up above that 5-day moving average. The 5-day moving average flattened out. Now it's heading higher again. So short term, we give the benefit of that doubt to the buyers, but it's still stuck within this bigger mess in here. Let's take a look at the QID. This is the double inverse short fund, and a lot of people got along this market, and rightfully so, right over here as it broke past this level of resistance. Now, for those of you still holding it, guess what? You're wrong. And you're losing money twice as fast as the market goes up. So you need to do something about this. But this is a good way of looking at the market upside down. And basically, we saw a failed breakout on this bearish instrument, and now we're seeing the failure of that move. So this market could head back down towards that 50 level, and obviously if the Qs run out to new highs, then it's going to break through that 50 level and continue downwards. So if you're long the quid, you're wrong. Better do something to limit your losses here, because you're on the wrong side of it right now. And from failed moves come fast moves. Let's take a look also at oil, because oil, I haven't looked at that in a while. Actually, last time we looked at oil was back in here on this really big volume, and that was actually a bearish piece of inventory data, if I remember correctly, that there was bearish inventory data released that day. And sure enough, the bad news came out right at the bottom of this move. Now we've seen some political stuff happening worldwide that's kind of spurred on this rally. But when you look at oil objectively, what this has all done, regardless of the headlines, is that this market is recovering. We've got the 10-day moving average above the 20, which is above the 50, and the 50 is rising again too. So it looks like there's a potential for some resistance up near about this 55.5 to 56 level. 55.5 because it was this prior resistance, and 56 because that's where we've got this 200-day moving average. But clearly, oil is in an uptrend. We saw it rising on increasing volume. Relative to the volume on the advance, the volume diminished on this pullback. It looks like it's finding support at that 10-day moving average. I'm like anyone. I don't want to be paying $3-4 a gallon for oil, but getting back above about 52.80 or so, then oil might continue to move higher, and it might have made a pretty good little bottom in here. I think we're going to need to see this 200-day moving average flatten out a little bit. So perhaps we're going to be range bound, and there's even a case that could potentially be made for a left shoulder ahead. Maybe we run up and make a right shoulder too. And if that were the case, well, then we could see oil right back up towards this area here. I'm just eyeballing that in there. But oil looks like it's recovering. A bottom is a process. It's not an event based on worldwide politics, that sort of thing. But oil is starting to slowly shape up to look bullish again. So that's going to be good for the oil stocks and that sort of thing. I'll be back probably on Saturday with another video with ideas for trading next week. And if you're viewing this anywhere else other than my blog, be sure to check alphatrendsblogspot.com. Thanks.